This is Horizons, Middle East and Africa. Our top stories this morning. China plans to tighten restrictions on the export of tech used to make battery parts and process metals like gallium and lithium. That's as trade tensions with the U.S. rise. Tesla tumbles the most in more than 2 years as annual sales decline for the first time in over a decade. Morgan Stanley says the miss reflects a, quote, relatively aged product and more competition. Plus, South Korea's political tensions escalate with protests and a standoff at the presidential residence as investigators move to arrest impeached leader Yoon Suk Yeol. It's just gone 8 a.m. across the Emirates. I'm Christine Burke in Dubai in for Jubana Bersechi. So let's get you set up for the final trading session of the week because things are looking a bit better today than they did yesterday. You can see here both S&P 500 futures and NASDAQ futures pushing higher. That is after we saw the S&P suffer losses yesterday, the fifth straight day of losses on Wall Street. Losses were led by declines for Tesla, which fell more than 6% after we got those 2024 delivery figures that disappointed the market. Also, a place that we need to put some attention going into the day ahead is emerging market equities. We don't talk about EM equities all that often, but we are moving higher this morning. Yet yesterday we had losses, and we have traders out there looking for the potential for emerging market equities to move into correction territory. The narrative around emerging markets being that we are expecting to see these potentially hawkish trade policies come through from Donald Trump that will weigh on those economies. So something to keep front of mind as we push further into 2025. Another place we need to talk about this morning is oil, because Brent is a corner of the market that is starting 2025 off strong. We have Brent trading above $76 a barrel for the first time since October. And actually, Brent has risen so much in the last 2 days that we are now seeing the benchmark above its 100-day moving average, which is a bullish signal. Now, not so bullish is what is going on with the euro. So we have seen the euro weaken to the lowest levels since 2020. Yesterday was a big day of weakness for the currency. Again, on the back of these expectations that Trump trade policies may just hurt various economies around the world. So we are now looking for potential for the euro to reach U.S. dollar parity. We're still a little bit of a ways away, but you can see there, not all that far off. Let's check in on how markets in Asia are faring now. Avril Hong is in our Singapore studio. So, Avril, yesterday was a pretty nasty day for Chinese equities after we got that disappointing PMI data. What is moving over there this morning? Are we seeing those losses carry through?
Yeah, it was a bad start to 2025, not just for Chinese equities, Asia as a whole. The markets that were open anyway, and we're seeing that focus still on China today, but as you know, South Korea stocks as well, because the Kospi has been staging a rebound after a string of losses today, up about 2%. And this is amid optimism of an end to the political turmoil that's gripped the country, with investigators moving to arrest the impeached President Yoon Suk Yeol. We're seeing the Korean won also slightly firmer against the greenback today. But flip the board, as you say, it was a really bad start for Chinese stocks, the worst start to a year since 2016. And the concerns surrounding the manufacturing sentiment as well as the threat of tariffs are continuing to weigh, but helping to cap declines on the CSI 300 material stocks with rare earth firms in focus. Those are the ones gaining ground as China plans these export curbs on battery technology. We also have China looking to expand this trade-in program that will help to lift consumer spending, and this is expanded to include smartphones as well, not just household appliances or cars, vehicles. And the stock of Xiaomi rising to the highest since its listing in 2018. But overall, we are expecting volatility for Chinese markets, at least until Trump takes office. Christine?
Thanks so much, Avril. That's Avril Hong in our Singapore studio. I want to bring you some breaking news that's just crossing the terminal now, because it looks like President Biden has decided to block Nippon Steel's proposed deal for U.S. Steel. Nippon, of course, being the Japanese steelmaker that had proposed to buy out the company. Now, this is being reported by the Washington Post. President Biden had long flagged that he was opposed to this deal taking place, and we did see a bit of a Hail Mary from Nippon Steel recently, saying that it would give the U.S. some authority, if you will, over what it would do with U.S. Steel's business if this went ahead. But it looks like Joe Biden is ready to move on this. So one thing to note is that we don't have Japanese markets open today, so we shouldn't expect to see any reaction. But of course, when we do get Japanese markets open again, you might think that Nippon Steel would be a potentially big mover on this news. Now, let's talk more about China, because China is planning to tighten export restrictions on certain technology used to make battery components and the processing of two crucial metals amid rising trade tensions globally. The move is part of Beijing's efforts to protect its dominant position in the battery supply chain and critical minerals. For more on this, Min Lo, Bloomberg's China correspondent, joins us now. So, Min, how significant are these curbs for the global market?
Hi, Chrissy. So the Chinese Ministry of Commerce is now mulling curbs on the export of battery cathode material preparation technology, as well as some technologies and processes to extract lithium and gallium. Gallium is, of course, a material that is used in battery cathodes. Lithium is essential to EV batteries, and this comes when the U.S. has been trying to build up its own domestic EV supply chain while they impose these sky-high tariffs on Chinese EV makers to block them from entering the U.S. market. And there on the screen, you can see that China is by far the largest supplier of dozens of these critical minerals. And while it is possible to get them from other sources, it's likely going to be more expensive. And we know that this move is coming after China had just a month ago announced that they were banning several critical materials export to the U.S. as part of a tit-for-tat move in retaliation for the Biden administration announcing these stepping up of tech curbs on China. And already we're seeing some of these export prices. Take a look at antimony, one of those metals that had been curbed earlier, up 180% over the past year. So, of course, the Ministry of Commerce is now still gathering public comments until the end of the month. By the time that concludes, it means that Trump would already be in office. So any sort of retaliation from the U.S. will likely depend on Trump's response.
And also overnight, we got some news that the Biden administration is considering a rule to limit or even ban Chinese drones in the United States. What do we know about that story?
Yeah, so this is the latest in a series of probes into Chinese products on national security concerns, because if you remember a few months ago, the U.S. was looking into Chinese software and hardware related to connected vehicles, and then later on it was the legacy chips from China, and now there's these drones, which the U.S. ministry, the U.S. Department of Commerce is saying that these countries can leverage their political and legal frameworks to co-opt private entities for national interests. And this comes, by the way, just a few months after Europe has been accusing China of assisting Russia, for example, in developing these lethal attack drones that could aid Russia in the battlefield. And the backdrop of this is that U.S. lawmakers are saying Chinese firms make up about 90% of the global drones market. So they are now opening up for public comments from companies to get their reaction on the on the impact of this proposed rule. The deadline is March 4th. So again, by the time that concludes, it's going to leave the decision of what to do with that with the incoming Trump administration. So we're certainly going to see a lot of uncertainty, a lot of this tit-for-tat retaliation going back and forth between the two countries.
Yeah, it's so right. And we're only 3 days into the new year, and already here we are, as you say, seeing those tit-for-tat, and there's likely a lot more to come. That's Min Lo, Bloomberg's China correspondent. Thanks for all of that, Min. We appreciate it. Now, for a look at some of the other stories that we are following this morning, Bloomberg has learned that Chinese state-sponsored hackers broke into the computers of senior U.S. Treasury Department leaders. Sources say the hackers accessed drafts and notes for policy decisions, itineraries, and travel planning documents, as well as some internal communications. The agency is still assessing what was taken, but hackers did not compromise the department's email system or classified systems. Chinese officials have long denied U.S. allegations of state-sponsored cyber attacks. Israeli Prime Minister Benjamin Netanyahu's office says a delegation is headed to Qatar for discussions on a ceasefire with Hamas in Gaza. The push is possibly the last effort to secure a deal before U.S. President-elect Donald Trump takes office. An agreement would aim to return the roughly 100 remaining Israeli hostages held by Hamas and end an Israeli siege that has so far killed tens of thousands and sunk Gaza into a humanitarian crisis. Tesla shares fell after annual vehicle sales dropped for the first time in over a decade. That was despite a year-end push that delivered a record fourth quarter. Bloomberg's Global Business Asia editor, Peter Vercoe, joins us now. So, Peter, I'm looking here at some of the reaction to these numbers. Morgan Stanley analyst Adam Jonas saying this reflects a, quote, relatively aged product and more competition. But then Wedbush's Dan Ives is calling the numbers respectable. What do you make of the 2024 figures, and what does this mean for the outlook for Tesla in 2025?
Good morning, Christine. Well, the 2024 figures are a bit of a mixed bag. We saw a record fourth quarter for Tesla of about a record fourth quarter for Tesla, just under 500,000 in sales. But the guidance they had given in October had suggested that they might deliver up to 515,000 cars. And just to eke out a little bit of growth for the year. Obviously, that has come in under expectations, and I think that's why we saw the shares fall the way they did overnight. The outlook for 2025, it's a little bit cloudy at the moment. Musk in October forecast that he saw sales growing 20 to 30% this year. That does seem optimistic given the overall state of not just the auto market, but in particular the EV market. We've seen slowing demand globally for EVs. As Morgan Stanley said, they do have a limited and aging lineup, and that growth for Tesla really seems to be predicated on coming out with a more affordable car, somewhere in the $20,000 to $25,000 range that we have yet to see. Speculation is that may be unveiled in the first half of this year, but analysts and investors have been waiting a long time for that. And then the other thing that we're not sure about is how long the EV incentives that Joe Biden introduced, the $7,500 in the IRA, are going to last under Donald Trump, who has made it clear that he wants to wind those back.
Yeah, and we did hear overnight that the Cybertruck now qualifies for those U.S. tax credits. Can you very just quickly run us through what we know about that?
Yeah, so the Cybertruck qualifies for that $7,500 tax credit for now. Again, we don't know how long that's going to be in place. And given that the cost of a Cybertruck ranges up to $100,000, it's not something that's particularly price sensitive. It appeals to a very particular market. It's not really clear that qualification for the tax credit is going to increase sales of the Cybertruck too much.
All right, Peter, thanks so much for all of that. That's Peter Vercoe, Bloomberg's Global Business Asia editor. And still ahead, we'll get the market outlook with UBP's Kieran Calder with monetary policy and geopolitical risks in focus. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in a very rainy and very gloomy Dubai this morning. Well, let's talk about markets. Asian stocks are bucking the dour mood on Wall Street, while U.S. equity futures are also in the green. An index of dollar strength has eased after hitting a 2-year high. Let's bring in Kieran Calder, head of equity research for Asia at UBP. So, Kieran, good morning. Great to have you with us. Things are looking a little bit better this morning than they did to kick off 2025. Yesterday, we had losses on Wall Street, a nasty day in China as well. What do you make of what we saw yesterday? Does it indicate a bad omen for equity markets heading into 2025, or was it just a blip?
Yeah, I wouldn't necessarily say a bad omen, although, of course, we're starting the year. We're going to be having a lot of headlines around tariffs, China versus the U.S., and that's a good reason to remain cautious on China. If we look at the U.S., the market likes to talk about the Santa Claus rally. So unless we get 2% out of the S&P today, there is no Santa Claus rally. The good news is that that doesn't really matter. It's not a good predictor of market performance for the coming year, and it doesn't seem to be related to performance over the previous year either. So I wouldn't. I think some of the market action over the first couple of days makes sense, but I wouldn't read too much into it yet. We've got a big event starting in just over 2 weeks with the inauguration and the new administration, second Trump administration.
Yeah, a big event actually might be putting it quite lightly. When you look out to 2025, I'm looking at your research here. You say the #1 risk to markets in general is always going to be earnings, especially when valuation multiples are not cheap. There was also a note from Lisa Shallot at Morgan Stanley Wealth Management overnight, who she said that 2025 is going to be the show me year for earnings. And also she warned about the dominance of the Magnificent Seven in the States. What are you looking to for earnings when you peer into 2025?
So for us, we recommend a full allocation to equities in the context of a global balanced portfolio, and within that we have a preference for the U.S. By geography, and also we like tech and we like financials. So within tech, I think the market doesn't talk too much about the Mag 7 anymore, but there's about 4 left, which of course have been major drivers of earnings and market performance over the last year or 2 years. So for us, we're looking for a continuation of underlying earnings strength from some of those core, especially tech names, as the AI theme moves from the sort of infrastructure stage out into the services stage, and how companies can monetize this. And so outside of that, we also think that financials looks pretty good on a few drivers. One, that interest rate cut path is going to be a little bit lower, I guess shallower, than we thought before the hawkish pivot in December, which is good for net interest income overall. And then, of course, with the new administration, we would expect a little bit lighter touch on regulation, which is good for large banks, particularly around capital, where we may never see another Basel III endgame proposal or not. And it's probably good for smaller banks as well, where we might see a bit of M&A and other reasons for financials too.
So let's fast forward to a couple weeks from now. January 20th, it's Inauguration Day. President Trump steps into the Oval Office. What are the first steps that you were looking for him to take that will indicate to you whether we get the more hawkish outcome here, the most protectionist of policies from the new president?
Well, I mean, I think we just have to take him at face value. He's aiming for a big bang, and if you look at some of the people he wants to bring in around him, and of course they won't be confirmed yet, but yeah, he's aiming for a big bang. However, we would have to expect that over time it'll be difficult to do everything he wants to do. So I think we just have to look at the first 2 issues that have arose over before Christmas and the New Year. So the issues around the debt ceiling and continuing to fund the government, and gave themselves 3 months. Trump and Musk, first tried to scrap the whole thing and then tried to get in cancellation of the debt ceiling, and they did not get support for that. And then, of course, the second thing around H-1B visas has created a little bit of a rift in MAGA world as well. So, the difference between what he wants to do, which we should expect he's going to want to come in with a bang, and what he's able to do is probably wide, and will only be seen over the, we would expect the first couple of years of Trump 2.0.
Yeah, and as you said, he has so much that he does want to accomplish, and probably limited room to do it all, at least as quickly as he probably wants to. Well, that's Kieran Calder. Thank you so much. That's Kieran Calder, UVP Head of Equity Research for Asia. And coming up, we'll give you the latest on South Korea's political drama as supporters and security of impeached President Yoon Suk Yeol try to block his arrest. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Christine Burke in Dubai. South Korean authorities trying to arrest impeached President Yoon Suk Yeol are facing off with his security and about 1,000 protesters outside his residence seeking to block the attempt. Bloomberg's chief North Asia correspondent Stephen Ingle has been tracking all of the developments. So, Steve, great to see you this morning. Thanks for coming on to walk us through all that's going on. Some pretty big numbers here. 1,200 demonstrators, police deploying about 2,700 officers. A big effort here that's underway. Walk us through all that's happening.
Well, so far, all reports indicate that it's been fairly peaceful, but it's definitely a standoff right now as we head into the afternoon and a very cold but sunny day in Seoul. But the political crisis obviously still heating up, and it could come to a boil at some point this weekend because, again, on Tuesday, we got the Western Seoul District Court issuing that arrest warrant for President Yoon on Tuesday. That will basically expire on Monday. So the Corruption Investigation Unit, essentially, or office, is essentially acting on that, trying to execute that court order for the arrest of Yoon. So what investigators have done is they've tried to go to the president's residence in central Seoul. There's a large police barricade to keep everybody out and others from coming in, of course. And it's a long road that goes up on a hill where the residence is. But so far, the security apparatus and supporters, and even some media say a unit of the military, has prevented the 20 or so investigators from going in and up that hill and to the residence and to basically detain and arrest President Yoon as the court has ordered. Now, if they are able to do that, then they would have 48 hours, 2 days, to conduct a very quick investigation and decide whether to formally arrest the president or release him. But the problem is President Yoon is not allowing anyone into his residence, and his people are not allowing. So there is a standoff. We're hearing prosecutors are possibly trying to issue an arrest warrant for the security apparatus, preventing access to President Yoon. So it's high drama right now, not violent at this point. But again, temperatures are probably rising a little bit, even though the temperature outside is cold, very cold.
It does sound like temperatures are rising, definitely. Can you tell us, Steve, what is next if this arrest attempt fails?
Well, the clock would tick until Monday when that arrest warrant would lapse. There could be other district courts that could issue a similar arrest warrant. But the bigger picture, obviously, is once that December 14th impeachment happened by the National Assembly, the ball went over to the Constitutional Court to decide and determine. They're deliberating as we speak. They have a couple of months to do that, to decide whether the impeachment warrants the removal of President Yoon from office. So President Yoon is surely trying to buy time right now and go through the legal apparatus to try and save his job, if you will. Already he has been stripped of his executive duties. Finance minister is the acting president right now. But it's a standoff right now that is posing a crisis of confidence for sure in South Korea.
Well, thanks for all that, Stephen. That's Bloomberg's chief North Asia correspondent there with all of the latest. And coming up, it was a stellar 2024 for South African bonds. Stick with us next to hear all about it. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. China plans to tighten restrictions on the export of tech used to make battery parts and to process metals like gallium and lithium. That's as trade tensions with the U.S. rise. Tesla tumbles the most in more than 2 years as annual sales decline for the first time in over a decade. Morgan Stanley says the miss reflects a relatively aged product and more competition. Plus, South Korea's political tensions escalate with protests and a standoff at the presidential residence as investigators move to arrest impeached leader Yoon Suk Yeol. It's just gone 8:30 a.m. across the Emirates. I'm Christine Berg in Dubai. Well, happy Friday. Welcome to the second trading session of the year. And let me tell you, things are looking a bit more positive today than they did yesterday. U.S. equity futures moving higher after another down day on Wall Street yesterday. The S&P 500 closed out the Thursday session with its fifth consecutive loss. Declines in the U.S. being driven by losses for Tesla after we had that 2024 miss in deliveries of vehicles that really dragged on broader sentiment across the market. Emerging markets this morning are ticking a bit higher as well. However, I want to note that yesterday we did see losses for emerging markets as we had those declines coming through in China on the back of disappointing PMI data and concerns around the economy. Investors are on the lookout for emerging market equities to potentially move into correction territory now, meaning that we will have seen a drop of 10% since a peak that was reached in September of last year. Brent crude, another place you want to have some attention today because Brent is trading above $76 a barrel for the first time since October, and we are getting some bullish indicators as well as the benchmark moves above its 100-day moving average. Now check out this chart. This shows you that we are seeing some weakness in the euro dollar. So the euro yesterday had a pretty weak session coming down to its lowest since 2022, and many market strategists out there are now questioning if we will see the euro fall to parity with the dollar. You can see on the chart there that we still have a bit of a ways to go until we get there, but nevertheless, that has come into the narrative just as we see concerns around the potential for Trump policies to weigh on European economies, and also as there's potentially there is the potential for a divergence between the Fed and the ECB this year. Now, let's turn to South Africa, where the second half of last year saw the country's bonds perform best among 18 other emerging markets. They generated a total return of 14% across 2024. The coming to power of a ruling coalition between the ANC and Democratic Alliance Party boosted investment in the Rainbow Nations currency, equities, and also bonds. Bloomberg News editor-in-chief emeritus Matt Winkler has been looking closer at this, and he joins us now from New York. So, Matt, great to have you with us this morning. You recently wrote a Bloomberg opinion article talking about how the changes that we've seen in the political landscape in South Africa will translate into potentially more gains for the economy, a stronger rand. It sounds like you're quite bullish on the prospects for South Africa. Talk us through your views.
Well, this really goes back to April, and it actually goes back to before, if you will, the political change in South Africa. And what I'm talking about is beginning in April, as you rightly said, the bonds of the Rainbow Nation, as South Africa is referred, started rallying significantly. And what it meant at that point, April, was signaling voters were poised to repudiate the ANC, African National Congress, and its failure to reverse rising rate of crime, collapsing municipal sewage systems, exacerbated by energy shortages. And at that point, the rand had declined 26% since 2017. So the bond market was actually signaling a turning point politically. And of course, it did come in April, subsequently in June, with the election, which for the first time since Nelson Mandela's government of national unity ended apartheid 30 years ago. And so the ouster of the ANC as the parliamentary majority enabled President Cyril Ramaphosa, a Mandela protege, by the way, to rescue the economy. It's the largest economy in Africa. And what has happened since is the rand of all currencies has become one of the most favored in 24. And that really is quite surprising because, of course, we know the dollar had no rivals, and yet the rand more than held its own and continues to hold its halo. And all of that is about really a market perception that things are different in South Africa like they haven't been in more than a decade.
Yeah, so markets signaled well ahead of the election then that they were perhaps ready for some sort of change. How have perceptions changed since the election in terms of economic forecasts and things like that around the economy, for inflation, and for the rand?
Yeah, so I've already mentioned the favorable exchange of rands for dollars. Whatever doubts since the election persist related to crime, corruption, insufficient infrastructure, South Africa's gross domestic product has been upgraded 8 times since March to almost 1% growth in the fourth quarter. That's the most optimistic average forecast of 10 economists who contribute their research to Bloomberg for more than 1 year. And they now say that GDP will expand 1.6% by the end of 2025. So the expectation that we're talking about here is based on slower inflation. That's probably the most definitive measure of investor confidence, and that has turned favorable with the ANC losing its parliamentary majority. And you can see that, in all of the market measures of equity, debt, and so on. But it is noteworthy that the nation's consumer price index fell to 2.9% in November. It's almost half the level at the start of this year. So, last year. So there you have a real example of the progress that's been made in a relatively short time.
What do you think the top challenges are now for Cyril Ramaphosa as he seeks to build on this momentum?
Well, there have been so many false moons, and it's, as Abraham Lincoln once said, too familiar with disappointment to be very much chagrined. However, the fact that it's now January 2025 and the rand is more than holding its own, as I said, retaining most of its value against the dollar. The bond market is like it's never been really in more than a decade. And even the stock market has changed for the better. Just to give you some idea of that, the benchmark FTSE JSE Africa All Shares Index of all companies on the Johannesburg Stock Exchange gained 9.2% in 2024 through December 29th. And that compares with a 5.4% return for the MSCI Emerging Markets Index. So South Africa is actually outperforming the world in that respect. The bonds of South Africa lost 5.2% in the first quarter. They were the fifth worst performers among 19 countries in the emerging market index. And now they're number one. So, this is something that is actually unprecedented. So that's why it's noteworthy.
All right, Matt, well, thanks for breaking down all of your views on that. We really appreciate the time, and a Happy New Year to you. Well, that was Matt Winkler, Bloomberg News Editor-in-Chief Emeritus, joining us from New York. Well, Ivory Coast's president has announced the withdrawal of French troops from the country, joining a growing number of Francophone states that have asked the former colonial power to relinquish its military presence in West Africa. For more on this, Bloomberg's Ondiro Oganga joins us now in Kigali from Rwanda. So, Ondiro, what is behind this recent mass exit of French troops from West African countries? Why now are we kind of seeing this anti-French movement, if you will?
Hi, Christine. So there has been growing anti-French sentiment in the region. But if we look at Ivory Coast, unlike the previous exits that we've seen, this is joint and coordinated in partnership between Ivory Coast and France. And this comes just 10 months ahead of a general election where the president, Alassane Ouattara, could be seeking another term. And he wants to create the perception of a free and fair election without French interference. Like you mentioned in your intro, anti-French sentiment is growing in West Africa. We saw the current administration in Senegal ride that wave in their quest to coming to power. And now the president, Bassirou Faye, announced ending of foreign military troops' presence in Senegal in 2025. And he backs this up by saying that Senegal is a sovereign country, and sovereignties do not need to host military bases. Chad, also one of the last standing Western troops allies in the region where they were fighting Islamist insurgencies from, decided to cut ties with not only France, but also U.S. And the government spokesperson says that Chad, moving forward, will be pursuing alternative partnerships that are aligned with their national interests. And this narrative is not new. We've seen Mali, Niger, Burkina Faso cut ties with France and go as far as accusing ECOWAS, the regional economic bloc, for being under French influence.
Ondiro, where does this leave French and African relations moving forward? It seems like it's been quite a bit tense recently.
It is, and it's a big blow to President Emmanuel Macron's strategy for military presence in Africa. Prior to this, he was planning to cut down the military presence on the African continent. In Senegal, they were planning to scale back from 350 to 100. In Chad, 300 from 1,000. And in Ivory Coast, from 600 to 100. But it also leaves security gaps in the region. This is a region that has struggled with Islamist insurgencies that has killed thousands and left hundreds of thousands homeless. So that creates a gap in that region that will have to be filled one way or the other. And that's where other powers like Iran, Turkey, Russia come in. And Russia has already set up a presence in the region. They have mercenaries, they're selling weapons. So they're good on that front. However, we are likely to see France also try to pursue other relationships in Anglophone Africa. We saw the president of Nigeria, Bola Ahmed Tinubu, visit France. And also they're working with Kenya to have the France-Africa summit held on the African continent for the first time.
Ondiro, you're always all over all of the stories from your region. Thanks so much for the wonderful reporting. That's Bloomberg's Ondiro Oganga in Kigali, Rwanda. Now, for a look at some of the other stories that we are following on this Friday morning, Somalia is considering reversing a decision to exclude Ethiopian troops from a multinational force battling Islamist insurgents after talks brokered by Turkey last month. Ethiopia's defense minister met with Somali officials to discuss her country's participation in the United Nations-backed mission. Mogadishu had objected to Addis Ababa's future participation in the mission after a year-long dispute over Ethiopia's offer to recognize Somaliland. Nigerian telcos are lobbying for permission to double price tariffs as the country faces surging inflation and a steep depreciation of the naira against the dollar. MTN's Nigeria CEO has told local television the increase is needed to ensure service quality and continued growth. Now, pricing rules capping tariffs have been in place in Nigeria for the past 11 years. And don't miss Africa Amplified. Later next hour, it's our monthly deep dive into news from across the continent. Let's get some breaking news now that's just coming across, and it seems like it could be a pretty significant development out of Asia. So South Korea's probe team has reportedly stopped the execution of the arrest warrant against President Yoon Suk Yeol. That is according to Yonhap. Now, we are told that the team believes that it may be impossible to actually execute on the arrest warrant. Remember, all morning this morning, we have been reporting and hearing about how there has been some tension on the ground as the investigations team has tried to pursue the arrest of Yoon Suk Yeol, yet protesters are there and access to Yoon has been stopped. So from here, it seems that the anti-corruption body has said that it is going to decide its next steps in the future, but we're not exactly sure what that looks like. We will certainly be tracking this very closely and bringing you more details as we get them. Now, coming up, U.S. investigators have found no evidence linking the deadly attacks in New Orleans and Las Vegas that happened just hours apart on New Year's Day. We get the latest on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. U.S. investigators say they've found no evidence linking deadly attacks in New Orleans and Las Vegas. The FBI continues to examine the two incidents that rattled Americans as they rang in 2025. Let's bring in Bloomberg senior editor Bill Ferries, who joins us from Singapore. So, Bill, we were just saying that there has been a lot of details that have come out around these attacks and the two suspects related to these attacks. We have heard from authorities that they're not related, but what are the details that we know about the suspects, and what more have we learned about the incidents themselves?
Well, yeah, there was a lot of questions about whether these two attacks were related, because there were some interesting coincidences, at least it seems, behind both of them. Both these men who have been charged or blamed for the attacks were Army veterans. They both rented their vehicles on the same app, Turo. But beyond those kind of things, there doesn't seem to be anything linking them. In terms of the New Orleans case, authorities have repeatedly said that the attacker in that case was inspired by Islamic State. He had an Islamic State flag in his vehicle. He had posted videos signaling his support for the terrorist group ahead of the attack. We don't know quite as much about the situation in Las Vegas beyond the fact that the Army person who was found dead in the vehicle there appears to have died of a self-inflicted gunshot wound that officials say probably took place just seconds or moments before the fire and explosion ripped through that Tesla Cybertruck at the Trump Hotel in Vegas. But investigations are continuing. They're not ruling out that there could be some additional evidence that comes forward that links these two, but for right now, they don't see a connection.
Yeah, and officials did say yesterday at the press conference in Las Vegas that they are still on the lookout for any potential links, which I suppose makes sense because, as you just detailed, there are a lot of commonalities, which just does raise some red flags. But I guess at this point, we don't have any of those linkages. Can you tell us what we also heard from Biden and from Trump in response to this over the last 24 hours?
Well, it was interesting. President-elect Trump at first quickly said that the attacks were a sign of that Joe Biden's border policy failing Americans and failing U.S. national security. Of course, in the end, both of these attackers are American citizens and both former members of the Army. So it doesn't quite fit into that narrative. President Joe Biden has said that he may possibly visit New Orleans in the days ahead if his schedule permits to visit the attack site and perhaps meet with some of the victims of that driving attack in Bourbon Street. So the investigation is going to continue full speed. The football game that had been canceled because of the attack in New Orleans went forward. The Super Bowl is scheduled there for February. Of course, in all these things, we're seeing a much heightened security presence, and I think that's something that we're going to see going forward for the next few months in the United States.
Yeah, I think that's probably a fair statement to make. Bill, thanks so much as always. That's Bloomberg Senior Editor Bill Ferries in Singapore. And coming up, oil prices rise to their highest since October. We get the latest on the rally next. This is Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough, to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Well, oil's 4-day rally has helped crude break out of a tight trading range that it was stuck in for months. It's been driven by shrinking U.S. crude stockpiles and a breach of a key technical threshold. For more on the 2025 outlook, Stephen Sapinski, who leads our Asia energy coverage in Singapore, joins the conversation now. So, Stephen, good to see you. Oil trading this morning above $76 a barrel, both Brent and WTI having broken through 100-day moving averages. Has the narrative changed at all, though, or are we still in a very uncertain time for these markets?
I think the uncertainty and the fears of uncertainty are still well in place. Yes, it broke through that barrier, but we had analysts saying this morning that really now watch out for the 200-day moving average to really see if it can hold this gain and rise above there. Now, whether it holds, it depends on a number of factors. 2025 is going to be a bit of a frothier year for the oil market. You have factors including a potentially weaker China. Chinese demand hasn't really lived up to the expectation in 2024, and so 2025 we're expecting the same thing. No idea of if there's going to be much more stimulus from the government over the next few months. Also, as well, there's been some factory data that's been disappointing over the last week. And then on top of that, there's been this really big EV boom. My colleagues here in Bloomberg News have been writing about it pretty extensively. But EV sales in China have risen. That's sort of chipping away, very slowly, but chipping away at that gasoline and other oil demand there. Now, on top of that, you have OPEC Plus, which might be coming into the market later this year to add more supply. They've pushed back those plans from 2024 into 2025. But will they do that? It's one of those things that, if the market is frothy, they're going to just be adding to this oversupply. So that's going to be a difficult decision later this year when it comes to them.
Yeah, and how about gold markets? We just had gold come off its best year since 2010, and there are many voices out there that are actually saying we could go further and see another year of multiple records set for the metal. What are the factors at play for this metal?
Gold does best when it's sort of a risk-off situation. So I think there are going to be a number of factors. One, you have to watch the Fed. If you do see the Fed really begin to bring down interest rates, you're going to be seeing people kind of exiting treasuries and notes and all of that and entering into a safer bet, which would be likely gold. At the same time, you have to watch Trump. If Trump does something that's unpredictable, that risks the market, that could kind of really rile things for the S&P, you might see some folks kind of, again, shift their investments to a safe haven asset like gold. And then also you just have to see government buying. China was a large buyer of gold last year. Other central banks, other governments might be doing the same thing. So if that continues, you could see that add to more upward pressure for gold. So all those factors will have to be considered. But overall, if you see risk, if you see volatility, if something's happening in the Middle East, something in the war in Ukraine, that could also be a factor there helping to drive gold higher potentially.
Very quickly, do you have any views on iron ore?
Iron ore, it's all Chinese stimulus. When are we going to get the Chinese stimulus? China's the largest consumer of the product, and if they're going to be doing a lot of stimulus, a lot more building, anything that you could see where Chinese demand for industrial products increases, that's where you could see iron ore kind of lift. But at the moment, it does seem to be in the doldrums because we're not expecting anything at least before the Chinese Lunar New Year holiday.
All right, that's Stephen Sapinski, who leads our Asia energy coverage in Singapore. Well, here's a quick markets board for you. We are seeing equity futures push higher, and U.S. Treasuries, you can see here. Actually, they're not up on the screen, so forget that. But we've got weakness coming through for Europe as we head into the open there. Well, that is it for the first hour of Horizons Middle East and Africa. Stay with us for the second hour next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. China plans to tighten restrictions on the export of tech used to make battery parts and process metals like gallium and lithium. That's as trade tensions with the U.S. rise. Tesla tumbles the most in more than 2 years as annual sales decline for the first time in over a decade. Morgan Stanley says the miss reflects a relatively aged product and also more competition. Plus, South Korea's political tensions escalate with protests and a standoff at the presidential residence as investigators move to arrest impeached leader Yoon Suk Yeol. Well, good morning. It's just gone 9 a.m. across the Emirates. I'm Christine Burke in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it has just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Well, good morning, Jen, to you. Happy Friday, and happy Friday to all of our viewers as well. Let's get a check of where markets are heading as we get into the second full trading session of 2025. Things are looking a lot better today than they did yesterday, if I'm honest. You look at S&P 500 futures and NASDAQ futures, both solidly in the green after another down day on Wall Street yesterday. The S&P 500 did close out a fifth consecutive day of losses, and that was led by declines for Tesla. We mentioned there in the open that Tesla had its first decline in annual deliveries since in more than a decade. So that really weighed on sentiment in the U.S. If we look at emerging market equities, I put this up on the board for you today as well, because yesterday we got off we started 2025 on the back foot. Today we are seeing a little bit of a recovery, but the narrative around emerging markets is one that remains challenged, and investors are looking for us to potentially see the MSCI Emerging Market Index moving into correction territory, meaning that it will have suffered declines of 10% since reaching a peak in September. A lot of the story there around potential trade policies that will weigh on broader emerging market economies. And Brent crude, we've been talking about oil a lot already today. Here it is again for you. Brent trading above $76 a barrel. And we've seen that Brent just has moved above its 100-day moving average and what is often seen as a bullish signal for the market. Now let's talk about currency markets for a moment, because we had a lot of weakness coming through for the euro dollar yesterday. The euro touched its weakest to the dollar since 2022. And now we are getting some strategists out there questioning whether we kick off 2025 potentially with the euro moving closer to parity with the dollar. You can see here in this chart that purple line indicating where parity is. So we do still have some room to go in terms of seeing more weakness, but something to keep on your radar as we do push ahead. Now let's get over to some of our other top stories today. China is planning to tighten export restrictions on certain technology used to make battery components and the processing of two crucial metals amid rising trade tensions globally. Now, the move is part of Beijing's efforts to protect its dominant position in the battery supply chain and of critical minerals. For more on this, Minmin Lo, Bloomberg's China correspondent, joins us now. So, Minmin, already 2 days into the year, and we are seeing an escalation in trade tensions already. How significant is this latest action that we're seeing out of China?
Yeah, not surprising given the series of just tit-for-tat shots fired across the Pacific. And China, the Ministry of Commerce has been mulling this new ban on the export of battery cathode material preparation technology, as well as other sort of processes that are involved in the extraction of gallium and lithium. Gallium is critical in making battery cathodes, and lithium, of course, essential for those EV batteries. And this is coming as the U.S. has been doubling down on beefing up its own domestic EV supply chain as they impose those sky-high tariffs on Chinese EV makers to block them from entering the U.S. market. And there on the screen, you can see that China still dominates the supply of many of these critical minerals. It comes just about a month after China had announced they would be banning the shipments of some critical minerals to the U.S. in retaliation for the Biden administration expanding its tech curbs on China. And already we have seen the prices of some of these critical minerals going up since those initial curbs. And today you're seeing the market reaction. There are some of those mining stocks trading on the upside as we resume the afternoon session.
Yeah, that's a lot of green there on the screen in reaction to this news for some of those rare earths producers and for the metals themselves. We also got some news that the Biden administration is considering a rule to limit or potentially even ban Chinese drones in the U.S. What's the story there?
Yes, that's because U.S. lawmakers are saying that this is another sector that China is extremely dominant in. They say Chinese firms like DJI, like Hotel Robotics, they dominate about 90% of the global market share. So the U.S. Department of Commerce is now mulling banning these Chinese drones from being shipped to the U.S. They are opening it up for companies to post their comments on the potential impact of this proposed rule. The deadline is on March 4th, by which time Trump would already be in office. So the timing of this is also interesting. It looks like the Biden administration is really rushing through these probes to perhaps give Trump even more firepower as he takes office, more bargaining chips as he negotiates with China. And this comes as the Commerce Department cited concerns that countries like China can leverage their political and legal frameworks to co-opt private entities for national interests. This comes, of course, after Europe has accused China of helping Russia to develop these lethal attack drones that could help Russia in the battlefield in Ukraine as well.
Yeah, Min, and honestly, this probably is just a little bit of what we will continue to see as we move further into 2025 and things ratchet up, at least if we move in line with expectations. That's Min Lo, Bloomberg's China correspondent. Thanks so much.
Now let's turn to a top story we've been following. South Korean authorities have stopped executing the arrest warrant for impeached President Yoon Suk Yeol. That's after a face-off with his security and about 1,000 protesters outside his residence. Let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel. He's been tracking all the developments all morning for us and all day for us. Stephen, I've been trying to keep up with how quick this is moving on the Bloomberg T-Live blog. Fast developing story. Give us the latest.
Well, the attempt by the investigative office of corruption essentially has failed. They went there this morning, led by a reported team of about 20 investigators. There were also separately about 2,700 police officers surrounding the residence in central Seoul of the president, where President Yoon is said to be holding out, if you will, surrounded by his own security apparatus. More than 1,200 supporters are said to be there in support of him. Also, a reported military unit providing security as well for the president. Now we've gotten news in the last half hour or so that CIO, which is the Corruption Investigation Office that was leading this investigation following the Seoul Western District Court arrest warrant that was issued on Tuesday. Basically, the CIO has 1 week to fulfill that warrant and serve the arrest warrant to President Yoon. That's what they attempted to do this morning, but they faced resistance from his own security apparatus. We're getting statements essentially saying they've called off that attempt to serve him the arrest warrant, and they say that they deemed that it would be impossible to do so because of the security apparatus. They also expressed deep regret over President Yoon's stance. So we're at, again, a bit of a standstill on this political crisis. The markets kind of cheered a little bit this morning with the Kospi up because they seemed to think that investors did that, everything else was the bad news over the last month. Keep in mind, this is 1 month to the day after that surprise martial law order was issued by President Yoon that triggered this whole crisis. So it's already been priced in pretty much over those last 30 days. But the market rallied a little bit thinking that there might be a conclusion. Well, we got ahead of ourselves. There's going to be no conclusion today. That arrest warrant, though, expires on Monday. So we'll have to see whether another attempt will be made.
All right, Bloomberg's chief Asia correspondent, Stephen Engel, for us there with the latest in South Korea. Bloomberg's chief North Asia correspondent there. Stephen, thanks so much for that update. Now for a look at some other stories that we are following this morning. Tesla shares sank yesterday after the company reported its annual vehicle sales dropped for the first time in over a decade. The company sold 1.79 million vehicles last year, which was slightly less than it delivered in 2023 and also below analysts' estimates. Tesla faces many challenges in 2025, including lukewarm consumer demand, as well as potential changes to EV incentives under President-elect Donald Trump. Elon Musk has gifted 268,000 shares of Tesla to unnamed charities 2 days before the new year. The $112 million gift was part of the billionaire's year-end tax planning and went to what was described as certain charities. Musk sent $5.7 billion to unnamed charities in a similar manner at the end of 2021. Those funds went to his own nonprofit, the Musk Foundation. NVIDIA's banner year has supercharged its chief executive officer, Jensen Huang's net worth to new heights. Bloomberg's Billionaires Index currently has Huang as the 12th richest person in the world with a fortune of $114 billion, up more than $70 billion in 2024 alone. NVIDIA's remarkable stock surge has also boosted 3 of the company's longest-serving board members into the billionaire ranks. The chipmaker's board is one of the top 10 wealthiest in the world with a combined net worth of over $130 billion. Wow. Now, still ahead, we'll get the market outlook with Dhabi Capital's Rashmi Garg with monetary policy and also geopolitical risks in focus. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Christine Burke in Dubai. Asian equities are bucking the dour mood for global stocks today after U.S. shares closed lower for a 5th day. Joining us now is Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Rashmi, great to have you with me today on set. Appreciate you joining to talk through all your 2025 views. Let's start with China, because yesterday was ugly for the CSI 300. There was a lot of talk around disappointment with the PMI numbers, concerns for the Chinese economy, just given some of the expected Trump policies. Was that really what it was about, though, for you? And how did you read the losses that we saw yesterday?
So I think, Christine, first of all, good morning and thanks for having me. So I think what happened yesterday was really, what was building up towards the end of last year as well. I mean, there are a lot of issues with the Chinese economy, if you look at it. I mean, we have debt, we have demographics, we have the property sector, which is in a turmoil, and then we have poor consumer sentiment as well. And to add to those troubles, what we have is the threat of tariffs by Trump. Now, all of these things do not paint a pretty picture. So if you look at it from an investor's perspective, it's very difficult right now to go into the Chinese market with full conviction. And I think this was just, at the beginning of the year, you start putting in the trades that you really think are going to be there for the year. So I don't think right now I would be one of the people who would be really going into the Chinese market with a long-term mindset unless I get clarity on these points.
Yeah, and we have a lot of known uncertainties, right? And I think the issue with China probably is that we're just not exactly sure what the stimulus looks like. And additionally, we're not exactly sure what the Trump policies will ultimately look like either. So taken together, it's a bit of a double whammy of uncertainty for China. What does your gut tell you about where Trump is going to take policy?
See, Trump, in terms of China, he's always taken a hard line. And I would expect him to implement some strict tariffs on China. I would expect there would be some retaliation. We're already hearing about the rare earth and the drones and things like that. So I think that would happen, and it would basically become like a trade war kind of picture that we saw in the previous regime of Trump. And that is definitely not good. Now, how we expect China to counter it in terms of their own domestic economies, in terms of the stimulus, whether it will be enough is the question.
And when we consider central bank policy, got to talk about the Fed. We've always got to talk about the Fed, right? But when you look into 2025, you have said in some of your insights that I was reading before you were coming on this show that any sudden change in unemployment rates may change the outlook from hawkish to dovish for the Fed. We got initial jobless claims data yesterday showing those initial claims fell to the lowest in 8 months. New claims, continuing applications were also down. That paints a picture of a solid labor market. Yes. Are you concerned at all that that's going to change then and that we will see this pivot back to potentially a shift in Fed messaging?
So you're right, Christine. So far, we see a very robust labor market in the U.S., and which is where, even if you look at the summary of economic projections that were presented in the last FOMC meeting, actually the Fed expects the labor market to continue remaining strong. But that also could be one of the reasons for a surprise going into next year. And what we've seen is that, it is not a very predictable picture as far as the labor market is concerned. So if you remember the time, August, September, when, people started fearing that Fed is behind the curve, and then we saw the 50 bips jumbo rate cut by the Fed. It was all due to the labor market because there is a lot of sensitivity regarding the labor market. So I think this remains unpredictable, and if at all we were to see a sudden change in the labor market, we could very quickly see a change in tone from the Fed as well.
Yeah, and we saw clearly in mid-December when we got that Fed rate decision just how much the market hangs on every word that we hear from Jerome Powell and what the Fed is going to do. When you look into 2025, you say that the U.S. remains your favorite market. Tell us about your 2025 conviction calls.
So yes, I mean, it's really, I understand that the valuations are stretched and we are very well aware of that. At the same time, I think for us, there are two parts to an investment thesis. First is, of course, valuation, but the second is also the story. Now, if you are seeing cheap valuation with a great story, that is the perfect investment case. But here we see a great story with not such great valuations. But then there are other parts of the world where the stories are not great at all. So if you look at Europe, it's not really a great story for 2025. And China, again, we have so many uncertainties. So from that perspective, if we look at US remains a great story. It's a leader in innovation. There are so many themes which are at work. So we continue to like the US market if we look at it on a relative basis compared to the rest of the world.
And I did want to talk about geopolitics. I don't think we're going to have time, so let me just read a couple of your insights quickly. You think geopolitics will remain volatile, however, you are more positive on 2025 when compared to 2024. So next time we have you on the show, we'll get into all of that. That is Rashmi Garg, Dhabi Capital Senior Portfolio Manager. Well, coming up next in the show, we will be talking about the U.S. attacks that happened in New Orleans and in Las Vegas. Stick with us for all of the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. U.S. investigators say they found no evidence linking deadly attacks in New Orleans and Las Vegas. The FBI continues to examine the two incidents that rattled Americans as they rang in 2025.
There's also an FBI investigation in Las Vegas. We are following up on all potential leads and not ruling everything out. However, at this point, there is no definitive link between the attack here in New Orleans and the one in Las Vegas.
Let's bring in Bloomberg senior editor Bill Ferries, who is in Singapore and has been following this story for us. So, Bill, authorities there in New Orleans did label this as an act of terrorism. But again, we heard that they're not linking the two at this point in time. What is it that they're looking for now? What are they digging into?
Well, they are still, they haven't ruled out the possibility of some connection. They just don't see it yet. There were some interesting, coincidences between these two cases. Both of the attackers are former or current members of the U.S. Army. They both served at one time or another at the same military base. And then both vehicles were rented on the same app. That said, they don't see any real connections at this point. They're really digging into the social media profiles. They're talking to acquaintances and family members of the two people involved in these attacks. And they're looking to see, particularly in the case of the New Orleans attacker, whether there was any assistance or aid given to the attacker, the suspected attacker, there. So that's still very much an investigation in progress. The attacker in New Orleans, believed to be from Texas. They've taken the investigation to Houston and are talking to people there about what they may have known and other potential signs that something like this was coming.
How does this complicate the issue of national security, Bill, especially if we consider just a few weeks out from President-elect Trump being inaugurated as president?
Right. I think it is going to cause a rethink or a review of security precautions in major U.S. cities across the country, particularly in places like the French Quarter of New Orleans, where large crowds gather on a regular basis. There's some reporting that the bollards that normally would have blocked access to that street were being replaced, and that's why you had a police cruiser there. But the attacker was able to drive around that. I think there's going to be an examination of what more can be done. New Orleans, of course, is hosting the Super Bowl next month. That's going to be a major event with hundreds of thousands of people expected to descend on the city. You have the presidential inauguration in Washington, always a high security there's always a high security presence there, of course, but I think there's going to be a second look at what more can be done to stop these kind of attacks, whether they are coordinated by a terrorist group or the result of a lone wolf going after the public.
Absolutely. The early stages of the investigation there. Bloomberg senior editor Bill Ferry is in Singapore with the latest. Bill, thanks as always for joining us. Now, for a look at some other stories we are following. President Biden is preparing to issue a decree permanently banning new offshore oil and gas development in some U.S. coastal waters. Bloomberg has learned Biden is set to issue an executive order within days, locking in protections during his final weeks in the White House. This planned declaration is rooted in a 72-year-old law that gives the White House wide discretion to permanently protect U.S. waters without explicitly empowering presidents to revoke the designations. The move is certain to complicate President-elect Donald Trump's ambitions to drive more domestic energy production. U.S. bank reserves have fallen below $3 trillion, their lowest since October of 2020. A Fed report states that reserves fell by about $326 billion in the week through January 1st, in the largest weekly slide in over 2.5 years. The decline is attributed to year-end dynamics, quantitative tightening, and loan repayments. The Fed's continued removal of excess cash as it shrinks its balance sheet is also raising concerns about reserve scarcity. And Saudi Arabia has secured a $2.5 billion credit facility. The National Debt Management Center says the Sharia-compliant 3-year revolving credit is aimed at financing the general budgetary needs of the kingdom and aligns with the nation's medium-term public debt strategy. Christine?
Thanks for all those stories, Jen. I've got to say, I'm heading back to Saudi Arabia in just a couple of hours, so it's good to see that picture there of the city on the screen. Now, let's look at what's moving and shaking in markets as we head into the bottom half of the hour here, because U.S. equity futures are pushing higher still. We do get ISM manufacturing data a bit later today, which may be front of mind for investors. Not the biggest of economic data, but something to keep in mind. We did get U.S. jobless claims yesterday that painted a relatively solid picture for the U.S. labor market. Perhaps some of that is translating into the green that we are seeing today. When we look at the MSCI Asia Pacific Index, we are seeing a bit of a rebound, but I want to note that Chinese shares continue to trade lower after the pretty ugly start to the year that we got yesterday. And then when we look at Bitcoin, often viewed as a proxy for risk assets, that is down, trading at 96,500 or just about. Now, coming up, our monthly show, Africa Amplified, discusses the outlook for 2025. Top industry voices help us map out the risks and all of the opportunities. We'll get all of the details on that next. This is Bloomberg. Stick with us.